Good morning, everybody. Happy Monday. Yes, we're back. Welcome to the morning show here on Stock Market TV. Hunter Israel, Steve Strazza, no JC today. He'll be back with us tomorrow. He is where I was last week. He was at the beach. Unlike me, he's actually taking the day at the beach, whereas I powered through for you guys. I did the show from the beach. But now I'm back, and I guess I picked a week to go away because the market sucked last week, right? That's the conclusion. No good. Well, I'm back at my desk now, so I hope that means good things for the market. Let's see. We'll talk about that. We'll talk about last week, try to put it into context. We'll talk about some of the headlines we got over the weekend. Today's a big day for Apple. I'm sure we'll talk about that. We'll have Jason Pers on the show, so we'll talk to him about rates and commodities and all that jazz. So that's right, JC the part-timer. That's right, Harmon, or you tell him, JC the part-timer. All right, I got Strazza here, so let's boogie on down and get the show on the road.
Hello.
Hey,
how we doing? Yeah. Was football weekend as good for you as it was for me?
Yeah. Again, I'm not that big of a college football fan, but Sunday, man. Oh, wow. And it was like fall weather yesterday up here in the Northeast. So it was like a beautiful day. We had the windows open. It was nice, crisp fall air coming in. Football on the TV. What is not to love about that?
You're absolutely right. Great football weather up there.
Oh,
fantastic.
Beautiful. Gorgeous. How about you? How's your weekend?
It was great. It was great. Sounds like it was similar to yours. Watched a lot of football both days. Miami Hurricanes look so good. New York Giants, on the other hand, look terrible.
They did not look so good.
Dolphins squeaked one out. Big win for the Dolphins. JC's excited, I'm sure. Oh, yeah. Also, the prop bet that I talked about, 37.5 yards, longest completion. It took 3 plays. I'm so good at gambling.
Good. That's good. If it takes 3 plays for your prop bet to work, that's good.
Right?
Yeah.
Also, the Bills were getting spanked and the Dolphins were getting worked. I'm sitting there watching both those games. Money line, parlay, bang.
Well, that's why they play the whole game. Not a great weekend for everybody, as the chat is noting on the football front. Sorry, Mary. Michigan got spanked at home on Saturday in front of College game day, no less. Very, very embarrassing. But this is not a football show. This is a market show. So let's talk about markets, shall we?
Yeah. Chat's funny.
We have charts, right? Hans, what do we got here? We got anything good? How are we doing this morning, Steve? We're in the green. That's progress.
Well, yeah, so let's talk about that. It looks now, do we have any zoomed in charts of SPY or Qs, Fonz? We had that retracement chart somewhere. So what's going on now is I think you get an oversold bounce, right? After the sell-off that we saw late last week. But where does it take us is really the question. So we're below the VWAPs now from the August 5th lows at the index level, more or less across the board. S&P is right there, trying to reclaim it here this morning. That's really the level for me. If you're below that VWAP from the August 5th low, you're probably retesting that level, right? And NASDAQ, honestly, to do it, NASDAQ's less than 3% away from a new closing low. So that could happen in a day, right? And the way that these sell-offs are gaining momentum, like midday, right? You'll look at the tape in the morning and it'll be like mixed, and then it starts shifting more and more red, and then it's like a bloodbath by 2:30. right? So I think that a retest of the lows might be needed at this point before we can establish some sort of tradable bottom here.
Wait. A
Yeah.
retest of which lows?
August 5th. And it's going to happen quicker, like I said, in some indexes than others. But S&P, that could take a couple sessions. Russell and NASDAQ.
I mean, the Russell's almost there at this point.
The Russell and NASDAQ can get there pretty quickly. And if you look at other, now new laggard groups, XLK too, I mean, that's one down day away from retesting. So I think because of the way that the automatic reaction off of those early August lows really failed and it sputtered out like this, I think you almost need to get that retest in here and then kind of see what happens from there. Late last week, also, I want to talk about some things. Industrials, which were one of those groups, that's the chart, right? This is perfect. So like I said, S&P trying to reclaim this level around 543 right here this morning. I think that would be big, right? Maybe that could spark a couple days rally. But you really want to see all the indexes across the board back above these pivot low VWAPs. If they're not, the longer that's the case, you retest those lows, right? And then we take it from there. I think it's as simple as that. This is a sit on your hands, hang out, watch the tape, right? Look for some relative strength, build a nice list, maybe protect yourself, put on some protective puts or something. I'm all for that stuff in this market. In the context of we're already pretty long, right? We own a lot of stuff. So I don't think it's a time to go, look to buy more. You build a relative strength list in a volatile environment like this. And then when the dust settles, right, and we establish some sort of tradable bottom, then you go and you lean into those relative strength leaders. But I think right here this week, let's get a retest in. I wish they would sell them off right now. Just get it over with. Let's see what happens. Is there any big economic data coming up this week that could be a catalyst for some sort of move?
What does an Apple iPhone launch event count as economic data?
No.
That was like a half serious question. Actually, it probably could in a lot of ways.
What's the big announcement that we're all looking for?
iPhone 16.
New AirPod Pro 3s, right?
No, the AirPods ain't it. It's the iPhone 16 with the AI and all the integrations and they're using ARM, I guess, for their chips. So that's the word. That's the scuttlebutt. So
this is going to be an absolutely monster upgrade cycle for this company.
I mean, that's what they're saying. And Dan Ives over at Wedbush said it'll be the biggest upgrade cycle of all time, but he's usually pretty bullish. So
he said that. No, Dan Ives is great. Dan Ives.
I'm not hating on. I'm just saying he's been bullish. He's been right, and he's saying this will be the biggest upgrade cycle in history. So,
wow. When is CPI, guys?
Not this week.
Listen, Palantir is a special stock right now.
Oh wait, yes. Well, CPI is Wednesday. Sorry.
So I got some bear charts that I want to run through, and then I think
hold on. Before you move on from that, so yeah, CPI is Wednesday. PPI also. But my question I was going to ask you was, how far do we have to drop for you to shift from like shopping list mode to like position management mode? You know what I mean?
I'm always in position management mode.
Okay, fine. I meant
so no, it's a good question. It depends, and everything's different.
You know what I mean? Yeah.
So I already took some off.
Okay.
I sold a third of my Solana, a month and a half ago now, right? Which was one of the biggest positions I had on this whole bull cycle. I've been taking profits in my tech stocks for 2 months now, right? So I own less stuff today than I did in July. What will make me sell more? It's really the individual patterns, right? I'm not going to look at the index or look at a headline and hit a space bar and sell everything ever, right? I look at the charts. I have alerts set. If Bitcoin completes a top, I'm done. I'm out. I'm so ready to sell so many cryptos right now because those look really toppy. Yeah. So been reducing the alts. None of them worked. It's been an absolute garbage trade. But I'm also open to the idea that there's some momentum divergences in place in that space, and maybe they hook higher, right? You get some sort of big save, in which case I'll buy more, right? Tech stocks. These AI names, like Dell and Micron, AMD that are completing tops, I'm already out, right? So I'm selling them based on the primary trend. And if I see a pattern play out that says this uptrend is over, then I sell. So because of that, I own a lot less because I've been doing that for 2 months now.
Okay, now, sorry, what were the charts that you want to bring up?
Some of these bearish charts. Fonz, let's get the SMH, the other SMH chart in here also. The absolute basis. Okay, so we went through the, you got them up? I'm looking at the deck here. Let me do some screen management. Okay, great. So semiconductors, we talked about this, Spencer. We talked about it on an absolute basis. This is relative terms. There have been 3 sessions since July 17th that have been the worst underperformance or the largest performance gap that did not favor semiconductors since going back to the great financial crisis. There've only been 3 days worse on a relative basis. And in fact, there's actually only been 1 day worse back in 2008 at the lows. But 3 days since July, we're in the top 6 worst relative performances on a daily basis in, what is that, 14, 16 years? Bad. Absolute basis, we're seeing something similar. Again, the nature of the way that they're selling these stocks, right? The character of this market has changed drastically. It's so important to be aware of that. I think the character of Bitcoin and cryptos has changed pretty drastically too, right? So we're seeing these things. We want to look at the charts for confirmation always, but want to be really mindful when we see sellers start to take control like this. At the same time, look at the relative trend here in SMH SPY. Slide 5. This is going to be a top. Sure looks like this is going to be a top. In the context of that rate of change chart, this is probably a top, right? See how we do that? Use that supporting evidence there from momentum. So I think I think semiconductors roll over relative to the broader market here. You do lose those leaders. And then the big question becomes, what's the rest of the market doing, right? Can we get by just owning more real estate, financials, and industrials? Does that work, right? We don't know. I'm hopeful. I think there's a good chance it does. Show the next chart, Fonz. This is good too. These risk appetite ratios, they're just rolling over one after the next. We can mark these charts up a million different ways, but the idea here that we're trying to illustrate with this one and the next one is that investors are positioning defensively, and they're positioning so defensively and have been for so many months now that we're starting to see trend reversals in these risk-off indicators. That was low volatility stocks or high beta versus low volatility stocks. This is utilities and then staples below it relative to the broader market. These are primary trend reversals. This kind of price pattern in the relative ratio suggests more outperformance from these defensive sectors in the future. And we know that outperformance from these groups over longer time frames speaks to a bear market. That's just, textbook.
You're talking more like this is beyond just like a retest, like going back to the index thing. This would be more than just a simple retest of those 5th lows. Now
They break.
you're talking about a full-on regime change.
I'm talking about the end, my friend.
The end of the current cycle. Let's be clear, not the end of all things.
Look, I think you have to be so open-minded and mentally flexible with this kind of stuff. I think. And I try not to think too much about stuff like this.
I like where your head is at because you are positioned for a bull market, but you're thinking about a bear market.
I'm thinking about keeping my money
right
when this thing ends. You know what I mean? So I'm like hyper focused on that. And I think that's the right move. If you've been in for 5, 6, 7 innings now, right? Been riding this thing since 2022 when internal.
It's been 2 years.
You've made a lot of money. Now keep that money, right? So you can put it to work in the next cycle. Same way. Right? Run it back a year or 2 from now. So that's always where my head is at when we get to the later innings. I think too, though, if we were like, okay, story time, this could be an extended cycle. We're going through, some form of an economic revolution right here in America and around the world with the AI situation. Okay, so you get these extended bull cycles when these things happen. We got a Web 1.0, right? Web 2.0, right? Maybe we get an extended cycle. Maybe that comes with a proactive wave in the middle of it. Maybe this is it, right? And who knows how long it takes, and you're going to get some massive drawdowns. We've talked about how some of these AI names, Dell, Micron, AMD down 40, 50, 60%, super micro, right? Like you could look back and say, wow, that was a bear market in the middle of a bull market for some of these guys. You look at, the average drawdown in some of these altcoins. Louis was saying, what, 65%, right? So maybe that's what we're going through. And then it's back up and off to the races. So we'll see. Maybe this doesn't have to result in some sort of, prolonged worse drawdown from here. Maybe this takes a couple months and the election gets by us and then it's, back up and to the right. But for now, all these things look really bad. I want to say something.
You know what's funny is all these things are kind of coalescing at the same time. Here you are pointing to a handful of charts that signal maybe the end of the bull run is nearer rather than nearer than some may think. Then also you've got this election thing in 2 months now.
Yeah,
and also you've got the Federal Reserve that's shifting its changing its policy rate. We've been in a high rate environment and now we're coming down off of that. So all these things kind of happening at the same time. Funny how that works out, right?
So we're always building lists as analysts, right? We're building lists and then basically allocating a weight to every data point on that list and then weighing that evidence, right? So the bear list right now is getting really long, Spencer, like you're saying, right? We're just adding something to it every day. Now it's trend reversal in staples relative, trend reversal in utilities relative. Look at this top in credit spreads. That's on the list now, right? So you're absolutely right. It's all coming together at the same time. I think a retest of the lows is almost like in the books. Let's just see it.
All right.
Happens in the next couple of days here. And the Nasdaq obviously does it first. I think S&P follows. That'll be big information, right? Can the S&P hold its lows from August? I think that's.
Well, I thought the balance was big information a month ago.
it was huge, and then look at the way it failed. That flag in the S&P 500 last month reminds me of the flag in Russell 2000 from July. It looked so perfect until it didn't. It's not good, right?
That's how it seems to go. Looks good until it doesn't.
We got Kenny today.
Yeah, we got Kenny. Wait, is he here? He's not here just yet. So
want to do the S&P 500?
Yeah, let's do that. I love how the S&P always announces their changes at like Friday at like 7 p.m. right, or like 8 p.m. on a Friday.
Yeah.
But also they've been somewhat quiet this year. I went back to look, and they usually add about 15 new companies to the S&P 500 a year. And this year they've only added I think 9 so far, and the 3 that they're adding or that they announced that they're adding on Friday, Palantir, Dell, and Erie was the last one. The company Erie Indemnity, ERIE, they're in, and they're replacing American Airlines, Etsy, and Bio-Rad. They're out.
Dude, Palantir is up 9% on this news. So good.
Yep.
It's basically, we said the other day, we were talking about this chart. We marked it up. Remember the big green and red obnoxious chart? So this thing's basically at new all-time highs because there's just no price memory at this level from back in 2021. This thing looks so good. It's going to 100. Get involved.
I mean,
this is one of the best stories out there right now, period.
It's taken a long time to get back here, right? But now that it's back, it's really hard to argue with this, right?
It's been orderly though. Like it hasn't been like, except for that momentum surge off the lows when this new uptrend started, like this is an orderly uptrend. Higher highs, higher lows, taking out some big levels. I think you could define your risk right here at that shelf of old highs. Draw right through it.
And let's not pretend or like assume that like being added to the S&P 500 means you automatically have to go up after that. I think it's going to happen, right? I mean, CrowdStrike got added back in June. Granted, they had a Black Swan-y type of event happen to them, but just because you get added to the index does not mean you have to go up in the ensuing days, weeks, months, right? It means there will be some automatic inflows, but the market sees that coming, obviously.
There is a mechanical catalyst.
There is
in terms of more demand all the time in the future for your stock, right? But we see stocks do really well. Again, I think to our conversations with Eddie Elfenbein when he comes on, we see these no-name stocks that are not in any indexes, they're not covered by any analysts. We see them do super well all the time. So it's not to say that you have to be included in an index to do well, but it doesn't hurt, right? It's certainly not bearish.
Yeah.
To have basically forced buying in your stock on a daily basis.
So anyway, so Palantir, Dell, and Erie, and then on the other side, American Airlines, which got added in 2015, they're out. Etsy was added in 2020, I believe. Yeah, they're out. And Biorad was added in 2020 also. Yes, and they're out. So it was a good run for you, American Airlines, but
see ya. Who else got booted? American and who?
American, Etsy, and Biorad.
Really? They booted the Etsy?
Etsy's gone.
Girls love Etsy, no? Right?
Yeah, I mean, yeah, we've used Etsy before here. Yeah. To buy some goodies.
Yeah.
But
okay.
Yeah, see ya. American Airlines, ouch.
It's been tough out there for these internet stocks, has it not? Not just social media.
Some of them, sure. Actually, that's true. A lot of software / internet hasn't come back, right?
Yeah, that's what I'm saying.
A lot of these SaaS and internet, right, are kind of the two beaten down, right? I mean,
yes. So, dude, software outside of the mega caps, not great. You look at equal weight software is down 5% last week. Terrible. Things gone.
I just kind of use Salesforce as my bellwether, right?
Salesforce.
However Salesforce is doing is how I assume the rest of the software space is doing, right?
Not great.
So
not great.
No, not great. And it's been that way for a while now. So
even you look at even Microsoft. We could draw this chart up. So I'm looking at Microsoft on my other screen now. Just got oversold, nasty oversold reading this time last month, August 5th volatility event. You could draw this chart as a top right here. Well above its prior cycle highs. And if you were to look back, say, wow, this thing doubled off of its lows in late 22, early 23. It's a good run. That's what you should do in a bull market. So the more I look at some of these charts that look to be topping out, I think to myself, we would look back in a year or two and be like, yeah, of course it topped out there. It was up 100%. This is great. What a run. Fantastic. Go tech. They'll be back. I don't know.
All right. We got Kenny here. Let's see what he's watching today. Maybe Palantir, for all we know, being up 9%. Let's see.
It's been pounds and I still kept it 100.
Yo,
what's up, player?
What's going on?
I am not watching Palantir. What's the story? They got added to the S&P?
Yeah, that's right.
Oh, hang on a second.
They're with the big boys now.
Got you on repeat. Actually not. Just watching the futures. If you guys trade futures and you're using VWAP, those two combinations could be your best friend. Maybe you haven't tried the futures contracts yet, but if you're using volume weighted average price, it's something to behold when you have a night like you had just now. But more importantly, let's talk about the New York Football Giants. Wow.
Yeah, that was pretty rough. But hold on. So on the futures thing, it's funny you mentioned that because I just brought up the S&Ps, and yeah, it this morning or just now, right? That just happened, bounced right off that VWAP.
Yeah. Here, you want to see this is interesting. I'll get you my screen. Here you go.
That's 20 minutes ago.
Usually when I'm trading futures, it's because there's some turmoil in the markets and I just can't sleep and I'm maybe hedging a position. But I kind of look at the markets like what could be disappointing on Monday morning? And I would say a gap up. When the market sells off Thursday and Friday, the common theme is you want to see the market gap down on Monday to get a nice little dip buy and then turn that into a turnaround Tuesday. But today we already have turnarounds, but it all started last night. So right here, this is the faux show bro. So again, there's your low of the day. And what the market likes to do is people put stops at lows of the day. So it wants to get every last person out before it makes the better move. So it's the fake out, shake out, and the breakout. Oh, you guys can't hear me?
I
Hang on
know.
a second.
I got you.
Oh, people in the chat room can't hear me. Hold on a second. I think it's you, not me.
It's me. Okay.
No, I'm not sure. It says that it looks like some people. You
Hmm.
can't. Wait, can you guys
I
hear
don't
me
know. It's all coming through on my end.
now? Okay. Well, okay, I'll repeat it again if the audio is now back on. So again, usually after Thursday and Fridays of selling, I love when the market gaps down on Monday, scares the hell out of everybody, and then we find the buyers and then we rally. So you had this last night. So the fake out, shake out, breakout. It's a trade that, when I learned this back in 1998, 1999 with the guys that taught me how to trade. One of the first chart patterns I ever learned. Fake out, shake out, breakout, faux show bro. So when you see it stop out that last person, and now that I use VWAP exclusively, you can see on my charts, basically the red lines are where just those prices where it hit. The blue line is the VWAP that formed last night. Faux show bro, underneath the VWAP, you break over the VWAP, you're a buyer, and you're using the faux and the show as your stop. So clearly define your trade. And when you're trading VWAP and prior day VWAP, you have this orange line up there where it's telling you where it wants to be. So if you don't think this is a beautiful form of manipulation and a beautiful idea that you have the rigging of the market, it loves VWAP and prior day VWAP. Look how it went there and double topped. And that's kind of, what an amazing trade. That's a 200-point rally. And on just one contract, this is $4,000. It's nice to wake up with a $4,000 in your account when you get up in the morning. So then if you don't see anything exciting, as far as the market's concerned, it's okay because you've already won. So I love the futures market. Especially trading around VWAP. It's not always like this. You usually have a counter trend move at 3 o'clock in the morning when some of the European markets are opening. But again, just a nice steady inflow of buyers today. And now if you're trading, this is what you look for. So if the market's going to get weak today, it's going to roll over, break that low right here, and then break VWAP, and you'll get some profit taking. That's kind of what I'm waiting for. But other than that, yeah. I mean, if you want to go look at that Palantir, same kind of scenario. I love this stock. I mean, I only own one stock right now. It's Rambus. But if I owned a second stock, it would be Palantir. I'm a big fan of the company. And I like the technicals. But again, when something's gapped up big on news, I wait for sellers to show up. Not meaning I'm going to short it. But, again, you see the foe in the show and there's your bro. I'm not going to get in the way of a stock that I've been waiting for it to break through 32.50 for the last, I think 18 months. I don't know the last time this thing's been over 33. Let's take a look. But I'm a fan. I'm a fan of this stock. Yeah. So basically, you're talking. I think it's about 2-year highs, if I'm not mistaken. Yeah, there's your 3-year chart. So again, I'm not getting in the way. I'm hoping it goes to 50. And if you guys are long Palantir, I'm rooting for you.
I should mention that everyone that is in Kenny's room gets his Thinkorswim script that overlays these VWAPs and the indicators as he has them onto your charts. So that's one of the things you get when you're in Kenny's room, which he's going to right now, and he's there every day live trading through the open until like 11:30 noon, and then sometimes back at the close as well. Always trading the volatility because that's where the action is.
It is. Yeah, we're all about the action. And lately we've been, it's been a pretty awesome time to be a trader again, So I love this. I love this market right now. Again, as selfishly as it sounds, I hope the market never rallies and I hope it never crashes because this beautiful trading range we're in provides opportunities every day for us. So sideways for the rest of our lives, baby. All right. I'll see you guys in the chat room.
See you, Kenny.
Good luck, everybody.
And let's bring on Jason Purz, shall we? Against all odds, recent member of the All-Star Charts team, and he's our futures fixed income guy, right? He's the guy. You know what we need to do? Jason, I'm just realizing, crap. We have to get you an intro. We don't have an intro for you, so we'll work on that this week. How about that? Cool.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
What up, man?
Hey, what's up, Spencer?
Got to get you an intro.
I know, I heard that. We gotta get the intro together, but
I know.
I'm excited, man. It's been fun working with everybody. You guys got a great team over here, so just excited to work with you guys.
Yeah, it's been good so far. Hasn't been great for the market since we sort of linked up, or has it? I don't know. What's your take?
To me, I can say just from my background's trading for hedge funds. So just trading for my own fund, trading for hedge funds, I can tell you every single year is always a mess around this time of year for me, for everybody. Unless you're like, a day trader, you're like Kenny. Kenny's a type where he can really kind of trade those ranges. For me, I'm trying to catch those big swings. So as a swing trader, position trader, it's always messy. We make most of our money throughout the year, but when it gets to the summer months, there's a lot of chop, there's a lot of volatility, there's a lot of pain at times, but it's mainly just frustration. And I think there's a couple things that I always tell traders to do is, one, you find a lot of professional traders take a lot of time off in the summer, like August, they'll take the whole month off and so on. We had an interesting August, but once again, it just was kind of flat. So a lot of traders will just take that time off. Or, another way to do it is take down your position sizing. You could do that as well. Or if you're a trader like me and you take signals and so on, you continue to take the signals, but you have to understand you're going to get chopped up. And this is just a choppy market, especially we're going to get to the election coming up soon. I mean, with the election coming up soon, this makes a lot of sense that we're just chopping around here in September. It might be a little volatile.
What are your funds in right now, Jason?
We're still long a lot of things. We're not long technology anymore. We were long technology going back to, what was that signal? I think it was January 30th, 2023. We were long technology that whole time. Now we're not in technology anymore. Same thing with semiconductors. We're not long semiconductors anymore. But the sectors that are showing relative strength, and you and I have been talking about this a bunch, financials, utilities, REITs. So across the board, we do have things we want to be long in this market. And I think a lot of the times people think of, hey, if technology is not going up and the S&P 500 is kind of flat, where do I go? And it's like, well, there's a lot of things to trade. Yes, welcome to September. I totally agree, and that's how it goes in the September October area. So when you're looking, and I'm talking to the chat, but when you're looking at those periods, you're going to see a lot of volatility. But you're also going to see some opportunities. Bonds, that's been an opportunity. And Steve and I, we've really taken advantage of that opportunity over at All Star Charts.
So at what point do you look at your mix and see what your systems have you in and say, shit, this is really defensive. I'm in gold. I'm in yen. I'm in bonds. I'm in staples. I'm in real estate. They got me out of tech. No more growth stocks. Is there any moment where you look and you say, whoa, or you just let the models figure it out?
When the breadth looks the way it does in the long term. Now, once again, there's a lot of different variables and nobody knows for sure in the market. But the one thing I do know is if I follow my systems, I usually make money. So my systems still continue to tell me, like, we're in a solid bull market here, long term. Sure, there could be short-term volatility. Sure, September, October could be a mess. Makes a lot of sense, but most of the time when you see that type of breadth still under the surface and the sector's leading, a lot of people look at utilities and they go, oh my God, it was an interesting one in the original Market Wizards. The guy talks about so many people get bearish when utilities are leading the way, but what he found in his back test is that utilities lead the way in good solid bull markets, usually when rates are dropping. So it could be a scenario like that. And also go back to 2019. This is recent history. 2019. The market was in a very defensive posture. Bonds were moving up, but also utilities were one of the leaders that year. So was consumer staples, and REITs did well that year. So once again, it's do you really want to get extremely defensive here and move out of the market only to bonds or something? I don't think so, but I think maybe investing broadly in just technology and things, that might be something you want to look at and say, no, I don't want to be long just technology. I want to go into these defensive sectors. And I know nobody likes it because it's boring and doesn't sound as cool as tech or growth. But really, there's a lot of alpha to be made. These sectors are very undervalued. There's a lot of money to be made in them. You can make some money here.
You could buy the AI stocks of utilities and real estate.
Yes. And I think a lot of people don't look at it like that, Steve. I think a lot of people, when they look at the market, they go, it's either all or nothing. It's the S&P 500 or nothing. I can tell you for me, I'm a futures trader, and I'm probably one of the few that do not buy the S&P 500. I don't buy the E-minis. I buy the sector futures. I buy the NASDAQ, the Russell, and so on. I don't buy the S&P 500 because there's a lot of alpha in other areas. I'd rather be in something like the utility sector, the real estate sector, the financial sector. Those things can make a lot of money for you.
It looks like we're entering an environment where that strategy will do better than usual. Also, it's been hard to beat the indexes so far this cycle, but it looks like that's changing.
I think you got a point there. It's been hard to beat the indexes, but also it's that most people aren't willing to jump into those areas that we're talking about. And I see this happened back in 2019. And it's the same, like people just kind of laugh about it. And they were like, I remember people making fun of me like crazy. I was writing about utilities and REITs, and I was going to be in these areas. And I think it was going to be the trade for the year. And everybody continued to make fun of me about this trade. Consumer staples had calls that were just ridiculously undervalued 1 year out and so on. So we started to pick these things up, and we had a great year that year. But once again, are you willing to kind of go, hey, I'm going to dump these tech stocks. I'm going to move over here. That's what we do as traders. Like you always say, we look at the price. If we're looking at the price, it's telling us where to be, and we want to be in the winners.
Utilities have some work to do here. I'm just looking at XLU. Ran right back up into those prior cycle highs. And then 2 big down days, Thursday and Friday. So this will be interesting. See if they can get a breakout in the books and start looking more like XLP. But okay. And then talk to me about interest rates, Jason. Where's your head at? Because boy, these yield charts look awfully toppy to me across the board.
So it's funny you talk about that, and we were talking about this morning in our meeting, which is like we've been writing about bonds more than ever. And I
told Jason this morning we get together and just brainstorm ideas for posts during the week. And I said, man, your job's going to get harder and harder if you want to keep writing about bonds, because I don't know what hasn't been said at this point. I don't know if in All-Star Charts history we've ever wrote about bonds more in like the last month or two. Everybody, if Sean and I am out here writing about bonds too, I mean, it's crazy.
Sean's putting up bonds trades. We're in trouble.
Right? I don't know. Listen, everybody. I don't have enough data. I don't know what this means from a sentiment perspective, but I would guess it's probably not the best. Probably not the best.
It's tough, right? Because if you look at bonds, you would go, okay, bonds are moving up, therefore the market should start to follow. And once again, that's not false, right? The market should start to trade in maybe a defensive posture as long as bonds are moving up. But also, this doesn't usually happen. Like when we see us come out of inversion, this usually doesn't happen for a while. Usually we get into this very defensive sector. Next thing you know, utilities are leading the way and so on. Maybe that lasts to the end of the year. Maybe it lasts 6 more months. Who knows? But usually you have some time. And as traders, it's like, yeah, I could today say confidently, like at some point we will see a lot of volatility ahead, and we will see the market maybe head down 20%. Of course, anybody could say that. Anybody out there in the world could just say that. But I think as traders, we have to understand, okay, well, we want to take advantage of it now. And how do we do that? And we're doing that using bonds right now, using calls on bonds, using lots of different strategies on bonds at the moment, because there's alpha there. There's a lot of money to be made.
Yosel says Bianco's looking for higher interest rates. I mean, he's one of the best for the bond market, period. Is Jim going to be joining us in Chicago, Spencer? Do you know?
Yes.
That's great. Looking forward to that. We'll have to have him talk about what his views on interest rates are. We'll get back to you, Yosel.
And I have the same view, right? So it's interesting. So there's two different ways of looking at this. One is, are we looking at bonds as a structural trend or a trade? And for me, it's a trade.
Yeah.
And because I really do think, just like Jim, just like I was talking to Kevin Muir the other day from the Macro Tourist, talking
Higher
to these,
long run.
yes, higher in the long run. That's what I believe too. I believe we're going to go higher in the long run. But for now, I think the trade is to be long bonds. It's obviously there. There's continued breakouts. There's continued 52-week highs. Like, as long as we continue to see those things, we want to be participating in it. We don't want to be sitting there and going like, hey, you know, I know this is going to happen at some point. And once again, we're all different traders. You know, Kevin brought it up to me that the reason why he does this is because he couldn't stay. If he has a structural thesis that bond prices should be going lower, then he can't just buy the counter trend rally. He can't stick with a trade like that. So it's just however you trade, however you do it. So long term, I say, yeah, those guys are right. Rates will probably head higher, but for now, like you said, like we're looking at tops and yields. It looks like tops kind of across the board. The short end of the curve we like a lot more than the 30-year. So you know that basically anything from the 2-year to the 10-year looks really, really good. So we want to be long those things at the moment for a trade. And at some point that'll change. I don't see us getting back to zero rates anytime soon.
Yeah, and also that's your view. That's your opinion on the future. The charts right now, right? As much as I agree with you, longer run, I think rates higher. Charts right now are saying primary trend is turning, favoring bonds, and suggesting interest rates are coming down. And who knows, you know, how far these moves take us. And then we could still be right in the long run, anticipating higher interest rates, but that could be 2 years out, right? And there could be a really nice trade here in the meantime. So it's great to have views like you do, but at the same time, you're looking at the chart, and if the chart does not confirm those views or even just blatantly disagrees with them, you're not like pushing back on the chart.
No, and that's a great point, because I think my opinion, what I feel, doesn't matter, and that's the one thing I've learned over the years is like, do not stick into the things like that. Do not get stuck on, I think rates should go higher, so therefore the charts are wrong. Charts confirm everything I do. And for all of us here at All Star Charts, you know, we're always looking at the price action. We're seeing breakouts. We're seeing moves to a certain direction. We're going to follow that, and that's it. It's as simple as that.
It's one thing that brings us all back, brings us together. We disagree all the time, but nobody disagrees, you know, with price here. It's nice. It's nice.
Jason, I wanted to ask you a couple things with regards to the S&P sector futures. First off, are those like how liquid are those?
So if you trade them during the day, they're very liquid. So if you're in the front, but you have to be in the front month contract. You basically have to be in the front month contract. That is it. That's the only one that really trades well. So if right now, I think it's September. So
I'll bet some are a lot more liquid than other sectors too.
Yeah, right. Like real estate versus tech, right?
Tech's going to have some good liquidity. Materials might be tough.
Well, actually, you know, I do find that most of them are just fine. You know, like they're not like, once again, like I'm not a, you know, $5 billion hedge fund. So, you know, you're running a $5 billion hedge fund. No, not today. Not yet.
You're big, bro.
It's coming. It's coming. You wait, you see, but not today. So as at the moment, you know, when you're trading, you know, let's say even 10, 20 contracts, you're fine. If you're trading like 1,000 contracts, like you're probably going to get into some serious trouble. And these are pretty big contracts. I think most of them in each sector are over 100K a piece. So they're pretty big contracts. So you won't see a lot of people. There's not a ton of liquidity, no overnight liquidity at all. So it kind of trades very similar to the market ETFs. But once again, like you're right, there's some of them that are a little less liquid, but for the most part, I haven't found one I can't trade. Yeah, there's some weird ones like, you know, the dividend one and so on that are very liquid. But things like energy, technology, industrials, those things are all pretty liquid.
You know, I'm sorry. I'm off in la. We should do a September sweater vest special as like a tribute to all our finance bros for fall, because they love fall, right? So we could like bust out our sweater vests. I got some good ones. I got some really
Wait, sweater vest or just vest?
The sweater vests, really. Yeah, it should be a good fleece, really, material. A good sweater vest should be a nice fleece. Probably should be done by like Vineyard Vines or Brooks Brothers. Something classy.
Okay.
Spencer seems to me like he's in my type of area in the Northeast. Are you more of a flannel guy or a sweater guy, Spencer?
I'm a sweater guy. Flannel's too much, man. I can't handle the flannel.
You could pull off a flannel, my friend.
I can't handle flannel. I die eventually.
Flannel maybe can't handle you. You could go full lumberjack. It might look great. I would try it.
Yeah, that's true.
Wait, I have to address a comment in the chat. Miami. This is not a new thing. It was my dream to go to the University of Miami growing up as a kid. My favorite.
I did not know that.
Yeah. This is not a JC thing.
Oh.
Nothing to do with it. I wanted to go to Miami. I wanted to live in Miami. He wanted to go to school where I grew up and live where I grew up. We traded places. But I've always been a Miami football fan. And where I went to school, we really don't have football. So as a UConn alum, there's really nothing there to root for, unfortunately.
But basketball.
Basketball is great all day. But, can't be the best in both sports.
Jason, a question from the chat from Dawson. How would you express a bullish sector bet? Would you do it via the futures themselves? Would you do calls, options on those futures, or what?
So we have two different portfolios. So one of those portfolios is just an ETF portfolio, very boring, no leverage, no call options, nothing. And then the
I
other
like that one.
Yep. The other portfolio is futures and options. So I would also look at it like, okay, if you had a bullish sector bet, and I don't know which one you're bullish on, but go through it, look at the 1-year calls. Try to price in like where you think it could go. And most of the time, it's a very interesting study that was done years ago. And reading through this study basically shows if you bought out of the money calls and out of the money puts a year out, slightly out of the money, most of the time the market isn't just going to chop around for over a year. Most of the time you make money. I think it was like a 90% win rate. You're going to make money. It's going to get over your strike. You're going to make money at some point, be able to close those things out. So I like to buy about, a little bit out of the money, about a year out. Look for mispricings. Look for serious times where there's very low volatility in those products. Look for choppy periods. You got a big, long weekly band squeeze on a weekly chart, something. And then maybe look for that breakout and then start to buy some calls when the price starts to confirm it. And just go a year out. Most traders, they try to go, nowadays, I used to think 30 days was crazy, but now with the 0 DTEs and so on, people are buying call options in shorter and shorter periods over time. But I think going forward a year out, you're going to make some serious money on that most of the time. If you're able to hold that long, some people, that's way out of their time frame. For me, I'm looking at a 6 months to, 1 year time frame for most of my trades.
All right. Thanks. Good answer. Good question, Dawson, and good answer. Do we have anything else in the chat? Otherwise, Jason, I'll let you run because it's going to open in 10 minutes. And I know, you've been open because features. So you got things to do
at 6 p.m.
Yeah. 6, right. Today, open yesterday. Mind blown. All right. Jason, it's Monday today. So you'll be doing the Gold Rush, right? Later today. Is that right? With Sam?
Yes, we've been doing the Gold Rush, and that, man, I got to tell you, Sam is great at what he does. Sam has some really clean charts. It looks really good every time. Every time he puts something out there, and he's always coming out with great trade ideas. We've had some great stuff from him lately, especially the trades, especially the gold miners, man. He's been killing it. So we've both been putting together some great stuff for everybody. So I'm excited to continue with that with Sam. It's been a lot of fun.
You guys are doing great.
Last one from the chat, and then we'll let you go. Thoughts on XLE, or in your case, energy more broadly.
We gotta open up this fucking can of worms.
No, let's not do it reasonably short, right? You don't have to go half hour on this.
All right,
Steve knows I could probably talk about it for 2 years, but
I know.
but let's get on it for short term. XLE chop. That's what I would think. Chop short term. Let's get into the end of the year. Let's see what it looks like. Most of the time in the election cycle, we do see, just looking at seasonality, we see in the election cycle, we do see a nice jump in energy going towards year end. So I would be looking towards year end. Even in the short term, natural gas looks like it could be up for a nice little bounce, continuing through at some point. Yeah, it's down a bit today, but it's down a bit and up a bit every single day. It's been up a lot more than down lately, so I would continue to look at natural gas. The XLE, though, we're going to get into it. I actually have a chart on the XLE against oil, so we can talk about that as well.
You know, oil services and the explorers and producers look as bad as these two groups have looked in a long time. Long time.
Yes, and when you're looking at XLE, I think something that's incredibly important to kind of pay attention to is the XLE's outperformance to crude oil. When you see the XLE outperforming crude oil to that magnitude, most of the time it's very rare that you're going to see it go straight into like a nasty bear market. And so at the moment now, I'm kind of looking at it like, hey, I think more sideways actions ahead, and also wait a second until you see some sort of price confirmation. We start to see a breakout. We start to see something in energy. I'd be very interested in it, but at the moment, it's just something that you kind of want to sit on your hands on at the moment. But I like this chart. It's something to continue to pay attention to. This major relative strength is amazing. So sit on your hands, but I'd be open to taking signals when they come.
Yeah, I think that's wise, Jason. XLE, like a lot of things right now, it's just opportunity cost, and you're better off waiting.
It blends into our bond thesis as well. When we're looking at our bond thesis and going, hey, bonds are moving up, we also know that most of the time that means energy does not do very well in that type of environment. So if energy is not going to do well in that type of environment, want to kind of get out of it. But if we're looking at the same idea that, hey, towards the end of the year, maybe that can change. Let's say the Fed starts to cut rates. Let's say inflation starts to roar back. Something like that could happen. And also pay attention to if bond prices, let's say the Fed's cutting rates and the 30-year bond price continues to move down, that would be probably a big signal that we could see something changing for the energy market.
Yep. All right.
Thanks, Jason.
Oxy warrants, Yosel, we've been out of the Oxy warrants for so long.
It broke that major level recently, right?
I mean,
Buffett zone.
We went like 4x on these things during the post-pandemic rally, but then they were basically like at the money. So what's the point in being in them at that point?
Don't know. Thanks, Jason.
Yep.
Later, brother.
All right.
Later.
Strazza, thoughts on selling puts on Palantir 30 days out? Bob, if you asked me Friday, I would say go for it all day. We were right at that level. Throw up the Palantir chart. We were right at that level on Friday. In fact, I pinged Alfonso Friday afternoon. I said, fuck, man, we should have gotten long calls again in Palantir. Like we were right here. The chart was set up so perfectly. I don't like the idea of selling puts in something when it's up 8%, right? When I sell puts, I want to sell them right at support, right at my level, because I want that trade to either start working immediately or stop me out. Like I want to be right there, and either that trade starts working and I'm making money like right away and we're bouncing off support, or it's breaking down and I'm out. Like that's how I like to sell puts. Now you're 8, 9, 10% above that risk level. Don't like it as much. What a difference a day can make. Selling puts is a super tactical thing, right? Like you want to sell your puts at a strike basically right at your support level, right where you are, basically at the money. And you want that trade to kind of happen quickly, whether it's a winner or a loser. That's the way.
Dawson wants to buy those puts from me, so there's always a market for it. Also,
yeah.
Look, Palantir up 8% now. You definitely want to see how it holds up in the first half hour, right? First 15 minutes, first half hour, very, very important. Whenever you have a big gap higher, big gap lower, first half hour is critical. Right?
This thing looks so good, Spencer. This thing looks so good. Oh my God.
All right, we'll see. Do we have the Apple chart? We can pull up Apple for a second. 1 o'clock Eastern time today, 10 o'clock Pacific is when they're going to do their event.
It's today? It's today?
Yeah.
Monday? Wow. Yeah.
Huh. No, I'm not so much interested in it for what Apple's stock is going to do.
Yeah.
I care from a consumer standpoint, but with events like this, there's always going to be follow-through movements from other companies based on whoever they announce they're using or working with, right? In years past, we've had top of my head, right? Adobe reactions. We've had we've had Disney reactions. Whoever their I forget who all their suppliers are now, but Qualcomm, right? Who's the big one that I can't think of? forget it. Whatever. This morning, saw a report that they're going to be using ARM chips, right? ARM. Okay, so you want to see what other companies are being mentioned in this event. That's where the reaction will be. That's where the action will be today. The volatility, not so much probably in Apple, because a lot of the headlines that they're going to say, frankly, if you go to the Apple blogs, they're mostly already out there, right? They're probably not going to say anything too groundbreaking.
Is there going to be Vision Pro stuff? Got to be, right?
Will there be Vision Pro stuff?
I would imagine.
I don't know.
Okay.
I don't know, actually. I know there's going to be some AirPod stuff, and obviously the phone is the big one here. Probably some watch stuff as well. So wearables and phone. I don't know about the Vision.
Huawei's trifold phone gets 2.7 million pre-orders ahead of Apple.
Saw that.
16
Yeah.
launch. Jeez.
Yep. All right. What else did I have on my list? I think that actually may have been it.
Merck down.
Merck is down. So the big leader this morning, the big gainer, is Summit Therapeutics, up 32%.
Yep.
And they had some positive drug news over the weekend.
So this
and
is lung cancer?
This drug competes with Keytruda from Merck, right? It's the same
lung cancer.
Yeah, lung cancer, exactly. So good news for Summit Therapeutics. Like I said, up 32% this morning. Merck, which has the big drug in this space, down a few percentage points on that hit. So that's why that's down the way it is.
I believe that's a huge revenue stream for them. Billy, yeah, we still like WPM. Still like precious metals. It'll be lower beta, but it's a quality name. Workday down 3%. Traders talking about weakness following no inclusion into S&P 500. See, it goes both ways. They feel like they got snuffed a little bit on the inclusion news. Workday, see that? That's interesting.
Did you have anything in the hot corner? Was small today. Was there anything of note in there?
ARM is up pre-market on the Apple stuff. Oh, you know what we didn't get to talk about last week is the Nippon Steel.
Oh, yeah. What? Which part? Was it Cleveland Cliffs? Is that who it was?
They said, no, to the Nippon U.S. Steel deal.
And Cleveland Cliffs was the one that raised their hand. They're like, we're ready to buy at whatever we need to buy to make this deal happen. So
they're trying to swoop in.
They volunteered. Anything that U.S. Steel would shut down. Cleveland Cliffs raised their hand. It was like, we'll buy it from you.
So U.S. Steel got clobbered on this news last week.
Did they? I didn't see. Let's pull up the chart. I didn't see on Friday.
It plunged like 25% intraday. Wednesday.
Oh shit! Oh, that was Wednesday. Yeah. Wow.
Yeah,
dude.
But if you look at this chart, right, since they announced the deal last December, it's down.
That tells you all you need to know right there. Merger arbitrage is. It tells you. It tells you.
It had already drawn down 20% before they just announced last week that it wasn't going through. So the market was sniffing it out.
Damn.
Yeah.
Yeah, it gapped up to 50 on that on the day they announced this deal last December.
Yeah.
And has now had several massive gap downs since. So
I like AMRK a lot, guys. I'm in that.
AMRK?
That thing's squeezing. AMRK precious metals.
Oh no, that's ARMK.
But really, to just wrap up the metals and U.S. Steel Cleveland Cliffs conversation, this whole group just looks uninvestable right now. These industrial metal stocks, right? The metals and mining names, just really bad stuff going on across the board. Copper, terrible. Steel, terrible. You look at the rare earths and stuff like that, awful. So commodity stocks continue to struggle. Pretty much everything outside of precious metals has had a rough go this year, and even something like silver, it's almost like just gold. It's like gold and everything else in the world of commodities right now. You can throw energy in that conversation too. Like I said, oil services out here making new 52-week lows. It's terrible. So
is it kind of like how it's not a perfect analogy, but kind of like how Bitcoin and everything else, because Bitcoin seems to be holding up better than most right now. Not doing great, but at least it's not.
Look, Bitcoin's been like, you mean today, right?
I mean, over the past few months, but
Oh, look, man, Bitcoin doesn't look good.
no, I'm just saying compared to the rest of that space, right?
Yes.
But yeah. Oh, hey, look at that opening bell. I missed it. 9:33.
Look, Coinbase getting smacked again today.
Did I see that Square overtook Coinbase in market cap? Did I see that? I think I did.
Really?
Yeah.
I mean, they're both big companies at this point. That's fine.
What else jumps out today?
Coinbase is in a monster drawdown at this point. Let's see. Just from the July highs,
Yeah.
Coinbase this morning is down like 45%. So things are no bueno in crypto land. And
Steve, are you excited to bet on the presidential election?
I don't think I will be. I have no idea what is going on there. It is so hard to tell what's real, what's fake news, what poll you could trust, what odds you could even trust. It's so sad as an American. I don't remember this being the case when I was younger, but you just don't know what kind of news you could even trust. So I have no idea. I can get no read on who will be the likely victor coming out of the election in 2 months.
All right, well, if this is your thing, keep an eye on Kalshi this week because they got the okay on Friday.
On what?
From the courts. Kalshi?
What's Kalshi?
Kalshi. Kalshi. They're it's betting markets on all sorts of random stuff, right?
Really?
And they got the okay on Friday to launch actual betting markets on the election. So
do they do sports too, or just like weird bets?
I don't think they do sports. It's all weird stuff. Like you can bet on some really like obtuse things. A lot of music, a lot of
we did it. Election markets are now legal in the US for the first time in 100 years. Stay tuned for more info. Share with your friends, and God bless America. That's great.
There you go.
That's fun. No, I probably won't. Maybe we'll have a little fun. I gambled so much yesterday because I was just so excited for football to be back.
I have to get back into it, like the sports betting thing. I really only bet on football, so I have to like work my way in like gradually, like get back into the pool a little bit at a time. So maybe next week is the week for me. I don't know. We'll see. Other headlines I saw. Big Lots. Sorry about that. Chapter 11 for them. This stock hit an all-time high 3 years ago, and in 3 years has gone from all-time high to bankruptcy.
What stock?
Big
Oh,
Lots, BIG.
Yeah. I saw Rooney's text about that. Very funny.
Why are you guys shopping at Big Lots?
No, he was just talking about how miraculous it is that it went from an all-time high to a zero in such short time.
Yeah, all-time high to zero in 3 years.
That's great.
That
Hey,
comes at you fast.
Aren't markets fun? Aren't markets?
Oh yeah.
Fun?
All right. Did you have anything in the hot corner you want to mention or no?
Let's just do it quick, and then let's just shut this thing down early today. Got some trades to make here this morning.
I'm for it. Let's see what we got.
So hot right now.
So first of all, they keep buying this prospect capital. Executives over here at PSEC. We talked about it last week. Let's just mention it again here today. This stock is scooping back above a big level. You know, it's lows from earlier in the year, late last year. That's PSEC. Chief Operating Officer and the Chief Executive just keep buying shares. So it's interesting. $4 million in their most recent filings. So it stands out. Then the one that we want to highlight today is Healthcare Realty Trust, HR. REITs look better than anything. Past couple of weeks, past couple of months now, right? We're talking about real estate nonstop internally on our shows, in the blog. They're popping up on our scans. because the charts look like this. You see that 200-day moving average flattening out, curling higher, indicating a new uptrend is underway. We have a really clear level here just north of 18. I think we take that out, any day now because we've been coiling right at this level. Look at that chop and that nice tight flag right at the breakout level. Above 18, you got to be long all day. REITs look great.
Healthcare REITs specifically, right, Steve?
Healthcare is one of the stronger subsectors within real estate, 100%. But Spencer, it's starting to just be across the board. Like they're all looking good. Commercial, the office REITs are starting to look good. It's crazy.
I haven't seen that.
Yeah. Mm-hmm.
Office REITs. Wow. Okay.
We like them a lot. Is it defensive? I don't know. We can overthink it. We could talk about it all day.
Isn't that like, wouldn't office REITs be like offensive because they're super like distressed?
You would think it's offense. Absolutely. So Spencer, we were talking this morning, little analyst powwow, and Grant was making that point, real estate, when they're outperforming, it's usually bad. And I said, you can't, not this time. Let's not overthink them this time, right? Because this was the sector culprit. They were going to blow up. Real estate was the black swan. Commercial real estate was the big bad story this whole cycle. No sector, has performed worse up until now, right? In this bull market cycle. Sentiment completely washed out. Valuations completely washed out. And now they got the interest rate thing going on as a tailwind, right? Was a headwind when rates were rising. Now rates are falling, topping out here. That's good for real estate stocks. Should be really good.
I'm waiting for the commercial real estate blow up, and it never really. I mean, a little bit we got it, but
that's the kind of sentiment you want with your bottoms, right? Like we're looking at these charts, and these are just textbook rounding bottoms, right? They are classic bearish to bullish trend reversal patterns. And when you think about where sentiment is or was at the lows for these guys, totally washed out, right? On every magazine cover you could find everywhere in every magazine stand around the world. Spooky stories about commercial real estate. And look at you now, REITs, looking good.
Wow.
So
what a time to be alive.
Yeah, I think that
office REITs
sentiment signal there is one worth paying attention to, right? Because we pay attention to sentiment at extremes, and boy, was it extreme for real estate.
All right, guys, get the hot corner. Hey, it's a free daily note. Comes out every single weekday, usually around like 7:30, 8 o'clock in the morning. It's quick. It takes about 30 seconds to read all the biggest trades from insiders, hedge funds, institutions, Congress people, all in there for you every day. It's free. Scan the QR code. Use the link in the description below. Get the hot corner tomorrow, every day thereafter.
Love it. You want to do recess and get out of here?
Yeah, I do.
What you got?
I was just thinking, actually. I was like, shit, I don't know what I got for recess.
Listen, we'll do football. Get that out of the way. Giants fan, I'm very sad. They're just so bad. I think like their odds to win the Super Bowl are like as juiced as any team because they're literally like the worst team in the league. Absolutely embarrassing week 1 performance. But I am so excited for University of Miami football. Going to probably go to a couple games this year. Definitely go to the Florida State game. I think they could win the national championship this year. Cam Ward is so good. Probably the Heisman. I love it. JC is going to be on here. He's going to be really obnoxious. So everybody get ready for that.
I know. It's going to be annoying.
What do you got?
My recess, I guess, is also football related. I took possession or delivery of my trophy for winning my fantasy football league last year. Finally.
That's awesome.
First time I've won. This league has been around for 10 years now. First time I've won. So
fantasy football is a tremendous waste of time, but it's a fantastic way to stay in touch with old friends.
That's exactly how I feel. That's how I feel too.
There's not a better way.
The amount of time and effort I've put into fantasy football has basically gone down every year for the last like 7 or 8 years in a row. But I will never quit ever, because it's the only way I talk to some of my friends. Right?
I'm like, fuck it, I'll pay $100 just to be in a group chat with my college friends.
Yes, that's how I feel.
And then they'll message me like on a Sunday morning, and be like, dude, can you set your lineup? Like I'm that guy. Don't be that guy.
That's how I feel too. So
you're a winner.
Shout out keeping in touch with your friends.
Also, I've been watching this new show on HBO because HBO is just fantastic. So I got a good one and a bad one that I'll throw out. Good one, they just came out because HBO cannot get enough of Sopranos, obviously, for obvious reasons. A new documentary on David Chase and his life just came out. I think it's going to be a short series. I started to watch, fell asleep, but it was good. And even if it's terrible, I'm going to watch it and love it. Okay, so maybe I'm not the one to ask. The other one, bad, Chimp Crazy. Okay, we've peaked out here on the crazy animal keepers documentaries, right? It started with Tiger King years ago, hasn't stopped since, and now they're just nasty and cringy and terrible. So this is about a lady who like kidnapped the chimp that was in the movie Buddy and George of the Jungle back in the day. He's like this famous chimp. He's like 40 years old now. And she kidnapped him, fight with PETA, hit him, pretended that he died. Like a whole thing. Sleeps in bed with the chimp. It went through the whole thing in Stamford, Connecticut, where the chimp ate the lady's face. Like, listen, you can't have monkeys as pets, people. It's just, it's crazy. And I don't want to watch these shows anymore. Like, I'm so over it. I think we've really overdone it with the crazy animal people shows.
Yeah. I know I'm a few months late on this show, but Baby Reindeer, we've been trying to power through, but man, does that make me wildly uncomfortable. I basically can't watch more. It's only 7 episodes, and I can't watch more than one at a time because I'm so uncomfortable watching it.
What? So explain why.
It's a show about a struggling British comedian and his stalker. And he made the show about himself. So this really happened to him.
Yeah. Okay.
And he has this stalker in London, I guess a couple of years ago. And it's so uncomfortable that, I guess it's good, but it's
the first episode. That's the one with the girl who sits at like his restaurant.
Yeah. She sits at the bar all day waiting for him.
Yeah, it's strange, dude. Weird stuff.
People are weird, man. Yeah, that's all I got, really. Yeah. All right. So it's Monday. The Flow Show is back after a week-long or 2-week-long hiatus, right? But you guys are back 11:30 a.m. Sean and Steve, The Flow Show, right here on YouTube. Going to try to find an options trade in the moment. And I guess that'll be all. So thanks for watching.
Yeah.
Smash the like. Go make some money. See you later.
I have a feeling we'll be buying puts today. Tune into the Flow Show.
Ooh. All right. We'll find out. See you guys.
Run it. I can't take no loss. I don't even know what it costs.